Welcome back to Fast Market, everyone. Kevin Hinks and Nathan Peterson. Now it's time for our cash tag segment. I'd like to bring in the co-founder of LikeFolio.com, Mr. Landon Swan, to the show. He's going to talk about our feature stock of the day, and that is Costco. Landon, everyone loves this company. That's why it trades at such a high valuation. But can it sustain that valuation? What data are you getting us that says either if it can or can't sustain these high levels? Because, man, this company is universally loved by all, Landon.
It is. It's loved by investors. It's loved by consumers. I mean, it has one of the highest, I guess, trust ratings or consumer happiness and trust categories that we've seen. In fact, not a lot of companies like this can go out and sell gold bars like they have. I mean, that requires a ton of trust, and they're capitalizing on that. So I think that just goes to show. But you know, they have created an experience where you pay to be a member, and you feel like it's a privilege. You enjoy going there. You get good deals, and there's actually an element of discovery, which is unique. I mean, if you go to generally speaking, if you go to Walmart or Target or a grocery store, oftentimes you have a set number of things you're looking to get. Maybe you pick up something extra. But Costco, you have this different mentality when you go, yeah, you want some certain things, but you're also looking for deals. They have that discovery element, which, we've always loved in like Five Below, but Costco's in a different category. This isn't junk that you're buying for $5. It's actually things that you want, and you're going to brag to your friends about the deal that you got. The Kirkland brand, which is the generic brand, it's kind of gone viral, which you don't see a lot of times. I mean, that's supposed to be the one that gets no attention, but people buy it. But yeah, it's taking off as well as far as social media. So yeah, this is a beloved company. But you're right. I mean, the price is rich. I mean, I think the PE is in the high 50s, 57, 58 PE ratio. Compare that to a Walmart's in around 40 or so. So, it used to be 20 was a lot back in the day, but now we're 40 seems low compared to Costco. But yeah, it's got a very high trust factor because customers love it. And, they've done well. I mean, if you look at last quarter, their revenue was up 9% year over year, same store sales up 7%, membership fees up 7%. And what's interesting is that was largely priced in. They missed earnings by, I think, 6 cents. They came in at 402 and the street was expecting 408. So what was interesting about that earnings report was the stock went from 1,030 to 880 over the next 5 days or so. It's since rebounded to just over $1,000. But I think it just kind of goes to show you that with a PE ratio that high and expectations that high, it doesn't take much to kind of spook investors and get them out of the stock. I would say that kind of action is generally a buying opportunity when there's an overreaction to a small miss like that. But eventually you have to start questioning the PE ratios. So this is a stock that LikeFolio's loved for a long time. We've had it in our portfolio with hedge funds for over 3 years. We've almost doubled on that investment. So it's doing really well. But you kind of got to look at what's going on right now. And so one of the things that I don't like about Costco is they report monthly, which lessens the LikeFolio advantage on the data side. And so when you look at their March numbers, it was I think their comp sales were plus 6.4, April plus 4.4, kind of heading in the wrong direction. E-commerce, similar story, plus 16% in March. April plus 13%. But they are a dominant player, as you can see here. Their average stores, their sales per store, they're crushing the competition and ramping up at a rate equal to or greater than their competition. So not only are they getting more dollars out of each store, but they're increasing that lead. Now, we are seeing that their web visits over the last little bit are down slightly. I think 1% is the number, whereas a company like Walmart is actually doing really well at plus 18%. So this is a little bit concerning. I wouldn't be surprised if this showed up a little bit of weakness in the upcoming report. But to counter that, we've also got searches, people talking about, how can I get a Costco membership? That's actually ramping up heading into summer, and that's going to be a forward-looking, sort of guidance element. If people are looking into getting that membership, that's something they can talk about as being a positive number over the next 3 to 6 months. So there's a little bit of a mixed bag here. The only other element that I'd kind of throw in there is they're somewhat tariff resistant, with about a third of their sales being imported. So they don't have complete resilience from that, but they have far less reliance than other companies. So they're well positioned to take on any kind of tariff troubles. So overall, I think they're mostly fairly priced here. I think a little bit too low despite the high PE ratio. And if they did have any kind of negative reaction, I think I'd be a buyer after this earnings report. Long-term, love it. Short-term, slightly bullish going into this earnings report, but with caution.
Yeah, Landon, Costco is certainly, just what a phenomenal business model. Yeah, to that valuation, 55 PE, you're growing EPS at 12%, top line at 8%. It's supposed to be a low margin business. It's supposed to be cyclical. Landon, it feels like this is one of these companies that has a halo along with Netflix, Spotify, Walmart, that with these business models that are so sticky and provide such value, here, pay us for a membership and we're going to save you money. And now we have such a membership base, we can negotiate with all our suppliers. What's not to like? That's why the valuation is where it is. And then in terms of economic cyclicality, you would think that once we go into a recession, here's where we get our buying opportunity on Costco, where it's going to drop 30, 40% when it bottoms out at the throes of the recession. But it seems like even in a recessionary environment, that almost elicits people to go and look to save money by going to Costco. What's the bear case? Have you seen anything in your data where clients want to cancel their membership for some reason?
Yeah, so the short answer, no, we don't see. We actually see a very, very high level of happiness. Customers love shopping at Costco, and to your point about cyclicality, yeah, if times are tough, you need deals, so you go to Costco, and if times are great, then when you're in Costco, you find extra deals. I mean, they have both sides of it nailed. It is really a great membership model, and like you said, people pay for the privilege of saving money. And they brag about it. They love it on social media. I mean, you can't understand how many posts we see and posts that we track about people bragging about the deals that they got, even talking about that generic brand Kirkland, which is amazing to me. What a win for them. So the bear case is it's just going to take a long time to get your money back at this PE ratio. That's the bear case. I mean, there's not a lot of sparks that we see coming that could ignite selling because they're going to miss this or miss that, or there's a brewing customer dissatisfaction. None of that is happening. If that were, then I think puts would be a fantastic place to be, but that's not the case. It's really just a question of valuation and how long is it going to take for me to make my money back at that kind of PE ratio, and how fast can they grow to catch up to that PE ratio. But if you zoom out on a 5-10 year chart and you look at the earnings per share of each one of those reports, you can see why that growth is very, very attractive. It's not going to stay at this level. It's going to continue to grow. So PE ratio is high, but it's going to continue to grow. So the stock should as well.
I went to Costco to buy paper towels, and I ended up buying a helicopter in the Cleveland Browns. That's my favorite joke about Costco. And that just sums up the extremes of when you walk in that store. But you can't argue with the valuation and how far it's run, and that eventually things are starting to slightly, even just slightly, decelerate, Landon. Landon, thanks for coming on as always, sharing the LikeFolio data with us here on Fast Market. Have a great day. All right, Nathan, you were mentioning